What's up, everybody? Jake coming at you again from StratGeeks. This is our algorithm called ORS Fusion, and like I was explaining in the video yesterday, it's those flat periods and those drawdowns that used to get the old Jake to give up, then switch strategies, and then as soon as I switched, the strategy that I switched to would start having losses, and the strategy that I switched from would start having its wins again. And this is the new Jake, so I stick with one strategy that has verified historical results. ORS has, like I said in the last video, over the course of months and months and months, we have verified 97% accuracy with our live to historical, and today was a perfect example of that. We had 7 winners and 2 losers live and backtest. Every single trade matched exactly on the back test. So what I'm showing you right now is the back test, and you could join our Discord server. Go to StratGeeks.com, join our Discord server, and post in the public chat. Hey, does the back test really match the live results? And somebody, just a regular member, will get back to you and say yes, it does. So you don't have to take it from me. Just get on StratGeeks.com, join our Discord server, ask somebody in the Discord server, just post a public message, and somebody will get back to you. That's not me at some point. So here we go. So let me just show you the 90 days this is 180 days performance of ORS Fusion. So we can see from our last video, we had, I don't think it was like about 19. Now we got 19,714. We increased our win rate a bit, 61.19, which is great. And here are the matching trades. Backtest to live. Let's get them all on here. This is the 1 minute MNQ. So we had our first win here. Then we had a loss, then we had a win, then we had a win, then we had a win, then we had a long trade that was a loss, just barely wicked us out there. And then we had a win and a win and a win. So 1, 2, 3, 4, 5, 6, 7 winners and 1, 2 losers. And I can't tell you how many strategies that I've had where this right here, this backtest would not match with the live. The live would have been like 4 wins and 2 losses, or maybe it would have been like 9 wins and 2 losses or something, but not so with ORS. We get matching historical results, and to me, that's the most important thing. Let's walk through a couple of these trades, because I haven't made a video on like what the heck is going on here. Why are we even taking these trades? So first thing I want to show you is our opening range. So here we got the open. Let's get the crosshair on. Opening at 9:30 a.m. Eastern Standard Time, right here at this candle. This is our low, so we put in our low. What we're looking for is the high and the low with the first 15 minutes of market action. And then over here at 9:45, we put in our, okay, so our high ends up being this right here, this wick. Because by the time 9:45 rather rolls around, we had not made a new high. So the first one, get rid of the crosshairs again. The first 3 minutes got us our low and our high. Okay, so what do we do with that? This is our section of time here. This dictates where our stops and our targets and our entries are for the whole rest of the day. This time period, the high and the low, and this time period is first 15 minutes. Okay, so now what do we do after we get our high and our low? Well, then we split our opening range up into 4 sections. 1, 2, 3, 4. And in backtest mode, we just plot the deviations or the range levels as hash marks, but we have this tool here. Send me an email and I can send you this tool if you'd like. Now, you won't be able to get the exact results. Now, I have people asking me all the time, here, yeah, I'd like that tool because I want to test ORS. Well, that's not how you test ORS, because we have a secondary moving average that's not plotting. It's a volume-weighted moving average that's helping these trades be more successful. And then we have our buy-sell zones that's a proprietary indicator that, you can maybe come up with a better way or a way that's just as good to trade these levels. But as far as being able to backtest it and trust it, the only way you can really do that is either go back 90 days, 30 days, 180 days, however far you want to go back, and manually plot all those trades out, which take hours and days, maybe weeks to get. And then who knows if they're actually accurate, because I don't know, there's a lot of curve fitting and a lot of weird stuff that can happen when you're manually backtesting. Trust me, I've experienced a lot of it. Anyway, so we got our 4 deviations. So here's our low. And we're just going to use this fib tool. And everybody gets this who signs up for ORS. And you know, you can have it for free if you want to just check out the levels, basically. And you're not going to be able to test ORS, but you can check out the levels, how they kind of react, how things react to these levels with it. And you can send me an email to onetraderjake@gmail.com, or better yet, get on StratGeeks.com, join our Discord server, send me a DM in Discord, and I'm a lot faster at responding that way. So now we have it. So we got 1, 2, 3, 4 sections, and now we can measure. So our high to the low of the opening range was about 241 ticks. And if we look here, it was actually 238. So I didn't have it exact. Oftentimes it's hard to get it as exact as ORS will get it. So 238 tick opening range. And that means each one of our deviations is about 60 ticks. But what we're doing, we're actually going for targets that are 2 deviations. So our target is 2 deviations, and our stop is 2 deviations, a 1-to-1 risk-reward ratio. So you're looking for about 120 tick targets and 120 tick stops. So let's look at our first trade. And our first trade is entered right here. And again, this is a 1-minute chart, so we got a lot of trades today. So we got our red. So we basically need 4 things. 1 is unseen. We do have a secret volume weighted moving average as well, but that's just not plotting on the chart right now. I guess it's not secret. When you buy a strategy, you'll know what it is. Anyway, this is an HMA, a 16 period HMA. So we need to have a price. We need 4 things really. We need a close below the HMA, so we get that here. We need our HMA to be blue. Blue means that we're sloping down. And it's blue here. And we also need to be in a red buy sell zone. This is our proprietary buy sell zone indicator. This is a sell zone. You can see it's lightly shaded red. This darker red over here, that basically means that we're just not trading. We're not trading until 10:30 a.m. Eastern Standard Time. It's just the way that it works. And then we turn to a green shaded zone over here, which means that's a buy zone. And then it just alternates back and forth, however the indicator has us plot. And then a sell zone. So we have our sell zone, we have our close below the moving average, we have a blue moving average, and not plotted is a volume weighted moving average, and we're also closed below that. So what we're doing now that we have all of our criteria met for an order placement, let's zoom in a little bit more. Looking at this trade here. So now that we have all of our criteria met, we're going to be that as soon as that happens, our order is going to be placed 1 line above that candle close. So there's the candle close here. So we're going to look for a pullback to this deviation line, and our target is plotted 2 deviations down. Our stop would be the same thing, but in the other direction. Our stop is 2 deviations up. And as you can see, we pulled back, and then bam, we hit our target. And then here we have a loss. And we'll go through this one too. Go through 1 win, 1 loss. Okay, so we're in a green shaded zone. Check. We are closing obviously above, and I'll show you why it did not take a trade here. So as soon as this candle closes, then here we have all of our criteria met, but we'll call it here. We are closing above the moving average. Our moving average is white, and we're in a buy zone. Plus, we are most likely, obviously, we're closing above the volume weighted moving average. So as soon as that happens, we would have an order placed right here on this line. But it does not pull back and fill us until here. So we get filled here. And then our target would be, up here at the top of the opening range. And our stop would be down here. And we get stopped out. So now we're 1 win, 1 loss for the day. And then we come and we close below the moving average again. Moving average is blue. We're in our sell zone and we're closing below our volume weighted moving average that is not plotting. We are closed here, and then it's going to look for 1 level back to enter. And we just drag this over here. Our stop is going to be up here like so. Our target is going to be down 2 levels. And as you can see, we chop around for a few minutes, and then bam, we go to target. So that's basic idea. And then, yeah, one more time on the strategy performance, 97% accurate, real time and historical. We have, yeah, a beautiful day, a beautiful 19,714 maximum drawdown, $1,200. And these are just averaging, this is just 2 micros, averaging 136, 140 something bucks a trade. And then we have this other cool thing called our risk smoothing. Let's go ahead and do that. So we want to try to average out our smaller standard deviation days to our larger deviation days. And to do that, we use a technique called risk smoothing. So we can get it so we are more in the range of $150 risk per trade. So how we do that is, I have some other videos on how we do that. We won't bother getting into that. But we'll take the winning trades, 443, minus the losing trades, 281. And that's going to give us 162 net wins over 6 months. Now times an average of $150 per trade. We can make that average higher or lower depending on how much we want to risk per day, depending on the size of the opening range, equals 24,300. And then we'll take our commissions, we'll call it about 1,800. So minus 1,800 equals, so we'll probably be closer to 22,500 with our risk smoothing method. And the risk smoothing method is really cool because it makes it so if there's a really large opening range and you'll see, look here with the largest winning trade, 257, with our risk smoothing, we'll never get a trade over 150 if we don't want. So we don't have to worry about larger risk than what our limit is with our smoothing method. And then we can take 22,500 divided by 6 months. Is a profit of $3,700 a month. Now, say you had 10 PAs. A lot of us have 10 PAs here. It's not that hard to get 10 PAs. Sign up with us, and I will personally show you how you can get PAs quite easily nowadays, especially when Apex has its sales and its 1 day to pass stuff. Not saying you're going to pass every day, but you can collect PAs over the course of a week or 2 quite easily nowadays. So times 10 PA accounts per month, $37,500 a month. Times 6 months. I mean, you're looking at a couple $100,000 in 6 months if you if you know, and obviously no guarantees, disclaimer. Past results are not indicative of future performance necessarily. All I can say is we do have a 97% accurate historical to live matching, live to historical matching with our strategy, and that right there is an amazing thing. It's an amazing thing. I'm going to try to keep this video under 15 minutes. Talk to y'all later. Actually, you know what? I'll show one more little thing on the way out. Let's show that on the way out. Yeah. The coolest thing about this equity curve is that it is 97% accurate from historical to live, live to historical. Yeah, we do have flat periods here. You know, we got a flat period here. We got a flat period here. We got a pretty big flat period here. But like I said in the last video, stick with it. Stick with it. Stick with it. Hold. Stick with it. Hold. Stick with it. Thanks, everybody. Talk to you later.